Hi everybody, Super Thursday. How are you? We have an actionable pattern. I'm sharing this, just posted in the pound. Face is bearish pound here. This is Greg Horvat's look. How's everyone doing today? Kevin, Patrick, Dill, Ben, V, Yazan, Zia, everyone doing okay? I believe Blake's going to come on at the beginning of the webinar. We'll see. Depends upon market action. We all know he's a shooter. Everyone doing okay? Well, let's have a good day. I do recommend treading lightly in this environment today. Okay, so here's Greg's look. Here's cable right here. Pretty nice divergence. Also, there was a harmonic count by Nick early in the week when Blake was shorting it. Nick said 990, 980 right there. Nice call by Nick. Best team on the net. Any ideas from the community before Blake jumps on here? Any shares from you FACE members? Okay, Euro following the same path, not quite as weak. A pretty wide range candle. I'm not doing anything here, but if we had one more rally in the Euro, I still think the megaphone formation is in play, but that would come in all the way up at 1350. Remember what Blake said, there are a bunch of option riders at the 111 level in Euro that expired tomorrow. So let's see how successful they're going to be in eliminating call premium in the next 48 hours. They're usually right. In fact, you know, I would recommend much higher. Yeah, 36 is also where the false breakout was, V, in Canada. But good eye with crude under a lot of pressure here. I think it was Alexandro Cervantes that liked the got long Canada last week. Alex is a pro. So we'll see what happens here with Euro. I'm going to be patient. If it breaks from here, it breaks here without me. Really, I think one of the better, also remember it's an Astro day, according to Norm Linsky. I would have a toe in the water in indices here. I'm not saying we can't blow to new highs, but there's no way a new high will confirm on the S&P. So you have your toe in the water here and say we rally to 45. You put out another one and then risk 10 handles above that, maybe 20, just enough to take out this high. And if you notice, NASDAQ is at new highs, but not confirming on the 4 hour, not confirming on the 1 either. So I don't know what happened. There it is. See this, see this. So we've taken out all the stops above this level right here, and we're trading it. So they took out the bears in NASDAQ in the last four candles. Hi Hardianto, how are you? Also long gold, added 97, buying on strength. Luca, don't fade Luca, and don't fade Hardianto. So Hardianto, let me guess, your target is under 140, 39.80. Okay, I'm a mind reader. Okay. And let's see, V61.8, you're looking at 110. Yeah, you've been waiting, you've been patient for that. Yeah. Okay, so you think we could still make one more new high, V? Is that correct? Clean out the bears up here in Euro? One more high, we'll see. Everything can happen today. And, you know, remember, I think I was talking with Steve yesterday down here, and we were talking about we hoped there was one more rally. He was showing the flag. and it held it. So I'm thinking 36 is going to be a problem. Just enough, maybe just enough to take out 5.5. Hi, Steve. Good morning.
Good morning, my friend. You know what's troubling for people that want to be long USD CAD is the fact that oil, crude, I mean,
Collapse.
Keeps crashing, and USD CAD is completely failing to rally.
Yeah, we don't even have a 50% correction, right?
Yeah, so I mean, just look at the shorter term divergence as well, which is what it is that we've currently made a wide, a comfortable new low in crude, right. And USD CAD's recovery has not made a new high, not even close. Yeah. So imagine what's going to happen if crude
catches a bit. Yeah. But maybe what we have to do, Steve, here's my screen, is take out this high first, give it like an ABC look.
Yes, of course. But I'm just saying.
I mean, I'd be looking to sell it rather.
Yeah, this price action in combination with the correlations is, has absolutely nothing bullish to it. Nothing at all. For USD CAD.
Okay, so Steve is more than strongly neutral. That's the harmonic call from the week ahead video. That's right, Brian. Funds flying, they give some ideas. 10-year note will crack 2.1. Yeah, it looks like we're going to take out 2.1. Luca. All right, so we have some ideas. Ardiano short guppy and looking for a buy around 140. I concur with that. Luca's looking, he's long gold, looking to add at 1297. B is looking for longs in the euro around 110, but thinks we might make one more marginal new high. Thank you, community. See, in the old days before I had Steve and Grega and Blake and Nick and Stelios, this is what I relied upon was you guys, and that was a great product in itself, just me and you guys. Now we have all this other content. Here's the reason why I don't get to show as many charts from you guys is because here we are. LeBron Morrow. You got it, buddy.
Hey, Blake. Good morning, mate.
How are you, bro?
Just trading. Just trying to make a living, man. Trying to make a living.
Be a machine.
Yeah, so the euro, the euro's holding up really well, and I'm trying to get positioned ahead of the UK election. So one of the things that I wanted to do today is I wanted to pick up the euro pound on a dip, and so I bought a little bit. I'm not as long as I want to be ultimately, but I'm using this little dip down here to pick up some euro pound. I picked some up at 86.70. Hold on, 86.74. So I'm long a little bit. Not, I still think we can drop down to like 86.20. So I don't want to get too aggressive here. But I'm using this this dip. Remember, just so you all know, the euro pound is in breakout territory. So I'm using any small dip to get long. Now, with the UK elections coming up tonight, this afternoon for us, late afternoon tonight.
Will you be in the grocery store?
Nope, hell no. I'm not doing grocery shopping today. No way. Right, I gotta be around for this one. So I'm trying to use these little dips to get long. But the thing about the euro, and I just pointed out on Twitter, is these are some really dovish comments from Mario Draghi, from inflation to growth forecast to not talking about no taper talk, no normalization. The euro should be going down right now, and it's not. I mean, it did. I mean, look, it spiked down, but the euro is holding up very, very well, and it has to be pointed out how well it is holding up, and I don't know why. I don't know why, because I was hoping that the euro might dip a little further to get long. It just hasn't materialized. But I really wanted to be long the euro pound. So I was kind of hoping for a much broader dip in the euro, which maybe we'll still get. But I was looking for maybe like a nice solid move below like 111, 111.50 or so. Because these are some dovish comments. I can't figure out for the life of me why we haven't dropped down to those levels, and why we haven't dipped down towards the spike lows down here towards the 111. There's like 111.13 is the 38% retracement. We can't even get down to the 24% retracement. So
maybe it's because they're squeezing the call riders at 111.
I don't know. I mean, there's probably a multitude of reasons. The one I can really come up with is that the dollar is just really weak. The dollar looks like crap. Now the dollar is making a little headway against like the cable right now, but I think this might be just some pre-election jitters. But the pound's really under some pressure here. Look at the pound, coming off, and I'll tell you, if I'm not long the pound, but with memories of Brexit, you probably have some people that are nervous Nellies getting out of the pound ahead of, and I don't know if there's any, what the betting houses are showing right now, or with the UK elections, but elections are ongoing at the moment. A couple other things that are standing out to me today is if you look at the Kiwi dollar hit the 618 retracement, and if you're ForexAnalytix subscriber, you got an alert right as that happened because I sent it out. So we hit the 618 retracement. RSI is divergent, and one thing that I did do is if you got the so let me talk a moment. If you got the Kiwi dollar at resistance, and you got the dollar yen at resistance, which is the breakdown point here at 110.20. What do you think I'm looking at right now?
Do I
Dale,
get it?
I'm quizzing you, Dale.
Sales.
I'm looking. No. Steve. The New Zealand
yen.
Yes, the New Zealand yen. So the New Zealand yen. Now, if you got the New Zealand dollar at resistance and the dollar yen at resistance, the New Zealand yen, notice how we just kind of pushed above that resistance there. Now, there's a 50% retracement that comes in. Let me get rid of this. I don't know what this is, so let me just delete that for now. You got a 50% retracement just above, which could ultimately be your risk here. You got this little itty bitty breakout here, but with the dollar yen at resistance and the US dollar Japanese yen at resistance, and S&P futures are coming down a bit, my assumption is we're probably not going to last up here. So I already shorted a little bit of New Zealand yen too, just because of the reasons why I just laid out to you.
Plus, it could have been a stop hunt, Blake. They just picked off the stops over that previous high.
Exactly. Well, these are the easy pickings to me, because if you're looking at the actual cross, which we are right now, yeah, that was just a little stop run. But if I look at the actual base currencies of both of them, I know the Kiwi dollar's at resistance, and I know the dollar yen is basically at resistance. So if I know both of those are resistance, I'll just short the New Zealand yen. And just a small position. I don't want to be too aggressive, as I don't think is a good idea, being aggressive right now ahead of the election, which, I mean, the Comey hearing, we already know what's going to happen. We already know what he's going to say. Now, we don't know the questions that are going to be asked, and that's going to be interesting, to see what, the hearing committee.
I'd be a little bit more sanguine about the Comey testimony or the rest of the news events if indices were selling off into it. But the fact that they're rallying into it tells me there's a lot of complacency about it, that a lot of people are thinking it's a non-event.
Right.
And, could be a failing rally up here in the indices.
Yeah, well, okay, so the definition of an uptrend is higher highs and higher lows. So right now we have higher highs and higher lows. We have stalled right now at this point. This is a 4-hour on the S&P, so you can kind of see here we stalled at the 786 retracement. we haven't hit higher highs. That doesn't mean we're not going to. I mean, you know, you look at the S&P and still, the S&P can still make higher highs and push up towards, which I ultimately think 2445 is the 161% extension. However, I think everybody else is looking at this number too, because we're in uncharted territory. Once you get started to get in uncharted territory, you know, it's hard to gauge exactly where the resistance is going to be. You have to start looking at micro levels, which we are looking at, you know, the last couple months worth of information versus the last couple years worth of information. So I think everybody's looking at the same levels, you know, coming up to the big, you know, 2450, 2445. But also when you start coming up to those prices, then people start getting a little nervous ahead of those prices too. And you might get some, you know, that might be a reason why we're seeing a little selling up here. But anyway, I guess the point I wanted to make is we're currently making higher highs and higher lows, but if we start a series of lower highs, and if we make like lower lows today, then that's going to be more of a, you know, trend change dynamic in the market, which is possible. Now, one other thing that I want you guys to pay attention to is gold. Gold has come down to basically levels that I'm, whoops, that's silver, here's gold. Basically levels that I'm starting to find attractive. I have orders at 1280 to buy gold, because I think that gold is, like I said, it's attractive down here. And if you guys didn't read our ForexAnalytix blog on what if gold breaks out, what else will happen, you should read that, because gold is on the daily chart.
I'll put the link. I'll put the link in the chat, Blake.
Okay. Thanks. So gold is technically it's in breakout territory. I mean, the daily chart is broken above that daily trend line. However, it's struggling with 1295. I put in my piece in that blog that above 1300 or 1295 by the end of the week, that's really the breakout. So, you know, unless we break above there, you know, it's not broken out. It has to be here. I mean, this is where, you know, we have to be going into tomorrow to be breaking out. But you'll notice that we're pulling back a little bit. We're pulling back, but still, you know, above the major trend line. So, you know, things that I think you guys should be keeping an eye on, you know, ahead of today. It's going to be a long day today with the Comey hearing and with the UK elections. You know, so make sure that you guys are really, you know, getting up and walking around, keeping your head in the game, because it's going to be, you know, it's a big day. It's a big day for the markets. So just some things that I'm doing and I'm thinking about right now are those few things.
Thank you, Blake.
My pleasure. And
so
now
buy gold and wait. That's what all the bullion guys say.
Buy gold and wait. Well,
yeah, don't wait to buy gold. Buy gold and wait.
Well, that definitely didn't work over the last 4 years. But you know, right now we're on the cusp of possibly turning higher in gold. And I'll have to say again, the euro's holding up well. The dollar doesn't look that great. And you know, we have to sit here and wonder why the euro isn't collapsing right now, and why is, you know, why isn't the dollar stronger? And maybe that has a little bit to do with gold at the moment. That might have something to do with it as well. But yeah, anyway, so there's gold and
have you seen the Bund, by the way, the Bund's move, which makes it even more curious that the euro hasn't dropped lower. Just look at it. It's incredible.
Oh yeah, you know, and I wasn't looking, but man, holy crap! Wow, that is really quite outstanding. And matter of fact, if I bet if Nick's listening in right now, this is a Gartley, right?
I think Nick is attending, actually, from what I see. So yes.
But that's close to, if not a Gartley. That means it should stop where we're at. But I don't know if I'd want to get in front of that. That's a big freaking move. That's a scary ass move.
We're not getting anything commensurate in U.S. stuff, are we, in the 10-year? Nothing like that, is it?
Well, the 10-year is, we're still above the 200-day moving average. I mean, we're stalling on that 38%, but the boon's moving because of draw.
How about this? The bonds that act well have a better performing currency.
What's that? I'm sorry. What?
The bonds, like the Bund, that's outperforming the 10-year U.S. Treasury, is outperforming because at this time it has an appreciating currency.
And no,
if I was going to buy long-term paper, the yield's important, but the value of the currency is.
Yes, but Dale, theoretically speaking, from an economic perspective, the first driver for any currency pair, because there isn't a single currency. I mean, we make indices like the DXY, but that's all just a basket. Is interest rate differential. So, for example, if from a theoretical perspective, this move up in the bonds, with the treasuries being unchanged on the day roughly, and the euro being very slightly negative on the day.
Hey, Steve, this is by the way, I'm sorry, this is a gap from, this is a repricing gap. That's what it is.
Oh, because they rolled contracts?
Oh, it was the rollover.
Yeah.
Oh, yeah.
Okay. Then.
And stock indexes, the E-mini and stuff, they roll today too.
They roll today. Okay. Thanks for letting us know.
Yeah,
okay.
That's it. Yeah,
then it makes sense. Okay.
All right. Take profits on your long on the rollover.
But but I mean, the Bund is still pretty strong though. Yeah, I mean, you have to admit, the Bund is strong. It's not that. It's
the
not
Bund
as strong.
structure is still on the long-term constructive, oppositely from what the treasuries show. There is no question about it, Blake. Yes.
Yeah.
It's a Gartley for me.
It is a Gartley, isn't it?
Yeah, it is. It's a bang on Gartley for me. Yeah.
But what is the Bund? I want to know what the Bund would be right here. Let me see. This is it. This is the Bund right here.
Okay.
That is the Bund.
Yeah.
Yeah.
That's a more
real.
But you were saying
Oanda haven't rolled, right? And FXCM haven't rolled it.
Right.
And FXCM have. When they roll it, it will go to that price, and that is the Gartley. So I think it's good. So keep an eye on it.
So it's a good short from here, you would think.
I would, yeah, like I will short it on the 4-hour reversal. Yeah.
Oh, okay. All right. Well, there you have it. There you have it. This
and if you look at the, what's really interesting, if you look at the 10-year ZN, have you got that to hand?
Yeah, I do.
Because the 10-year is kind of, if you go out to a weekly on the 10-year.
Yeah.
So if you draw a trend line from those like 2013 lows, we're really retesting a breakdown, of the, 2014 lows.
Oh, so something like this?
Yeah. And so we're retesting that breakdown, and it's the 38.2 retrace as well from the 2016 high. So it's a trend line back test. It's a 38.2 retest, and it's a 1618 as well. So there's kind of quite a lot of confluence here.
Announcer buying
a little bit higher. The 38.2 is a little bit higher. So like we're pretty close to.
Yeah, it's all right here.
Yeah,
all
right
there. I see. That's a good look, Nick. So she's saying that this trend line, which it's roughly here. I mean, you just say minus that spike.
Yeah, if you take it from that September low, like if you take it from that September low and go from there, like it's a kind of a difficult trend line, but it's around there. So.
It's around there, and then you got your 38%, and then your 161% extension. Now, the fact of the matter is, for me, then, looking at this is if we do break, that's a lot of confluence that we're breaking out too. So it's manageable risk if you want to take a punt at it being short, but the flip side is if it does break out, it's pretty massive, right?
Yes.
Okay.
Yes, very.
Nick,
Okay.
by the way, Jess is saying, hey guys, does GBP USD look like a possible head and shoulders forming? And the reason I mentioned that is just 5 minutes before you wrote that on the chat, Nick was actually writing that on the on our common Skype channel as well. So I know for a fact that at least Nick agrees with you, right, Nick?
Yes, I do.
If that's the head, big shoulder. If we're forming it, if this is the right shoulder.
If we are, that kind of also says we're not going to see a catastrophic collapse after tonight either. So.
Yeah, just a 25, 24.
Yeah. It'll be a
Right,
non-event or something.
Oh, interesting. All right. Well, hey, I'm going to pass it back over to you guys. Steve, do you want it, or Nick, do you got something you want to share?
No.
Nick,
I just popped
here,
up to say I haven't got anything ready. So, but I'm happy to answer questions.
Okay. Any more questions for Nick then, guys and gals?
Take it away, Steve.
And Dale, you may have some ideas.
I'm not selling anything, as they say.
Okay.
I like the top pick in the indexes, Blake.
Thanks. We'll see. We'll see.
Yeah, we'll see.
We'll see
it.
Yeah,
it's only the 1 millionth time I've said it. So.
Yeah, it's tough. It's tough being short equities here.
And I'd like to have a chance to sew Canada up around the false breakout, breakdown and breakout.
That's one last thing, Steve, that you might want to take a look at is, and the guys in a chat room I'm in are just saying that, you know, the dollar. I mean, how come the dollar isn't rallying against the Canadian? You got this huge sell-off in
actually, I showed that. Let me show it again. Just before you came in, Blake.
Yeah,
I was saying that we're seeing multiple types of divergences here. One is the fact that we haven't made a new high in this, in my opinion, corrective move higher, while crude has comfortably made a new low. We can see here the divergence.
Right now the arguments, and I kind of agree with them, that the crude oil correlation with the Canadian, especially the dollar Canadian, isn't probably as strong as it used to be. But still, I mean, crude took a $3 bath, you know, the last couple of days, and the dollar Canadian, you know, went up 20, 30, 40 pips, and that's it. And now it's already.
Nick's called that crude break too.
Yeah.
I have a chart to share with you actually, with the 10-year yield that would help the bearish case for bonds, if you'd like to.
Nick, I just passed the screen to you. Take it, and I'll take it
with the baton.
Wield the baton. I was never a gymnast. Okay, so this is the 10-year yield. And here we are, we've hit the 38.2 retracement of the entire rally from the July low, which is also this 1.618. This was a slightly lower high here, and it's kind of the 1.3 on this one, I think, too, yeah. So, yeah, so that's kind of a big deal fib as well in the 10-year yield, and you can see we've bounced off it the last 2 days. So, that kind of adds weight to at least a setback for bonds anyway, for a bit.
So you're expecting a dollar rebound in essence, Nick, as well?
A dollar rebound, yes. Yeah, I'm not calling the low in the dollar, but definitely a dollar rebound. It's funny, you know, like a week ago we were all saying how, you know, the dollar move was overdone and euro was overbought, and it's kept going, and everybody seems to have gone quiet, and I just think it might happen now. Everyone shut up about it, which is what tends to happen. Kills the most people.
And
you know, there might not even be very much of a bounce, but in the dollar, but I just think we could see one, yeah. And I can.
How about 99 in the Dixie, Nick?
Yeah, well, you know, I've talked before about how important to me the 23.6 Fibonacci retrace level is, and you can see here, I really like these fibs in the 10-year yield, because look how we respected the 23.6. So for me, when you draw a fib on a swing and you want to know, have I drawn it right? Is that the right swing? Should I maybe have taken another low, or should I be encompassing a bigger one like an A, B, C, so you've got two swings within it? The 23.6 test is the one that will tell you. And sometimes you look at it and it just goes straight through, and you go, oh, I must have drawn the fibs wrong, or it's not going to stop here, and then it'll come back and it'll do a perfect test of it from the other side. But for me, the 23.6 is like the touchstone Fibonacci level.
Nice gap fill on that,
yeah,
too.
it's really important. And in the DXY, and I can't remember what page it's on, but I'm going to find it because I was still going. Hold on a minute. I might have it here. So in the dollar index, we've hit the 23.6 retracement from the 2011 lows. And if we go to the 2009 lows, that's a little bit lower at 95.83. So I expect between 95.83 and 96.47, I expect a significant bounce in the dollar, just for the reason that it is that really important 23.6 Fibonacci level. And it might, if it goes straight through those twos at 2 and bounces and retests from the other side and it holds as a resistance, then I will be the first person to say that the dollar has made an important high and has reversed. So that's for me. So just like we're at that really important level in gold, we're also at that really important level in the dollar index for me. So, and I'll go to a weekly chart.
Adding to that, Nick, is the fact that these so we're at the 23.6 from this 2011 low here, and that's at 96.47. And if you zoom out a little bit, the 23.6 from this 2008 low is a teensy bit lower at 95.87. So between these two is where is trend support, is bullish trend support on a monthly level for me. While the DSI remains also extremely bearish, Nick, correct? Which helps the
DSI. When you look at really important levels, especially when we're looking at Bitcoin and stuff, and you've got a really important level, and you go, what are we going to do here? Are we gonna go through and then test it from the other side, or are we going to bounce off it? And when you see a market grinding, when it makes grindy moves, it's not, and the RSI isn't overbought or oversold, that's always when you tend to see it go through. When the markets grind, they just tend to keep going. But when you see, well oversold or overbought markets, they usually will bounce off first touch. They might go through after a bounce, but the first time they will bounce. So that's what I'm thinking.
Any unique friend was answered when I asked if they want to ask any more questions of you. They asked about Euro Kiwi. I have a technical view on it. Do you happen to have any harmonics view on the Euro Kiwi?
Teensy-weensy view.
I haven't looked at it, but I will for you while we on the fly.
Give us a teensy-weensy minute.
Yeah, I'll just find a space.
I haven't heard that in decades.
Huh?
Teensy-weensy.
Barry asked for it, by the way.
Okay, cool. Hi, Ari. You're a Kiwi, right?
Yes.
Those are both both of them have both really strong, haven't they? So I kind of tend to finding the weakest and the strongest one, and that doesn't tell me anything. Hold on, just clean this up. Okay, so normally, because of the way this is a monthly chart, so this decline is messy, but I would expect to see a two-wave rally from
an ABC or
yeah,
AB
at least
equals
an ABC.
CD. Yeah.
And this, so that's the first thing I'm looking at. So when I'm looking at that, I'm going to say, is this rally going to make a harmonic pattern? I'm just going to go down to a weekly. And then the first thing you like to look at, very common retracement for this second leg is an 886, which is approximately what we've done here. We've done an 886 retracement. So, and then we've had a sharp bullish reversal. So on my bigger picture, I would be looking for at least another leg of upside, and I would look for it to be a to be 61.8. This would be the minimum I'd be looking for, or an ABC. So I would be buying dips. I think that so if I can get it to do this. So I'd be looking at fib retracements of this swing, probably the 50, so I'm going to get down to daily, probably the 50% retracement, which puts you in amongst these highs here. This is a sort of, this is a head and shoulders pattern. It's a little bit messy, but you can see, my thing isn't working, but anyway. Left shoulder, head, right shoulder. So that approximately, that swing there then puts us back also to this 50% here, and this is the top of a gap. Once you leave a gap for a long time, it becomes like a window of support and resistance. So I would definitely be looking at the price action down here around 153.80, 154 to buy this for the next leg higher. And let's see where, if we do an ABC from this high, where that takes us. And that puts us exactly there as well, 153.94. So everything lines up for me there. So that's the 50% retracement. I'm going to make it red so you can see. So the 50% retracement of this entire rally and an ABC correction back to here, I would be looking for bullish price action to buy Euro New Zealand for another leg higher. Yeah, that's kind of what my view is.
And people, that's another demonstration.
And the first target would be the 61. So I'm looking for this next rally to have a relationship to this first swing. So the first target is going to be 61.8 of this swing. So that first target is 177. And if we make a full ABC correction, we go to 1.97. Okay?
Perfect, and that's how we also see confluences. You just saw Nick build, a harmonics analysis from scratch on a chart that he hadn't worked on. And Nick, do you have something else to show?
Nope. I'm happy to answer questions.
Okay.
But no.
Let me show you this to show also people how we get confluences and how analysis can point to the same thing. This is my chart, Nick.
Okay.
As you see.
Yeah.
I already, of course, had the fibs as you very well drew now, and I was checking. We were saying, since we were looking for a top, we have been saying here in the webinar that we are looking for a retracement to buy, because I completely agree with you, because this was a descending wedge. And I think that this break higher was extremely significant, and I don't believe that this is the only rebound we're going to see. I believe that the rebound, exactly as you said, has at least one leg higher, and the zones I was looking to rebuy was the previous 23.6 of the move lower, which coincides with this high.
Yeah, that always is a good one to watch.
Yes,
yeah.
At 154.90, and then it's the 50% retracement, as you said, which also coincides with some choppy price action we had here, which is the 153.80. So I think that soon Euro Kiwi is going to be entering a zone of interest, and perhaps even a little bit lower to close the gap. So I know that for the time being this looks like a wide zone, because we're talking a zone that extends between 152.80, which is the gap, and 154.80, so it's 200 pips, but 200 pips for these kind of tickers can come within a couple of days. But you know, that's why we also use candlestick analysis. So it's also important to see some kind of a reversal signal. It's not only about getting in the zone, but in general, this 200 pips zone, you know, we will be monitoring for a reversal signal. And then if this reversal gets confirmed, because for example, we can even draw this channel. I mean, somebody can say that we are in a steep descending channel. So let's make a parallel of this. There we go. Yeah. So we now have, you know, a lot of elements that can provide confluence to monitor on the way down. So Nick, as you see, you know, we started from two different types of analysis and we ended up seeing the same thing. And, you know, that's what we've said many times to people here, that it's, you know, the strength of multiple analysis approach that we do in Forex Analytics.
Cool. Good stuff. Yeah, well, I'm just still looking at this Euro Kiwi chart while you're talking. And it's really interesting, you know, if people zoom out to a monthly chart and they draw the highs and lows like big swing levels, it's really a good, it's really interesting how this pair reacts to big support and resistance levels too. And there is one at, you know, 154, so.
Tell me again, what do you want me to draw?
If you pop the screen over to me quickly, I'll show you.
Oh, sure, of course. There you go. Yours.
So I was just going to say, you know, these big monthly, you can see this is your Euro Kiwi. Okay, and I'm just going to draw these lines here. So you can see that when you draw these big highs and lows, support and resistance levels, you know, previous support becomes resistance. So here's support, and then this high again, and then this high, then this low, you know, which is way back, you know, and people laugh, but this low was all the way back in 2005, and then that was the high of this swing that we had. And so now you can look at these levels coming back. So if I draw this low here, which was also that monthly high and a pivot level there, and you take it across, that's 154.12. So it all kind of lines up. So I'm just saying that, you know, people say on the support and resistance levels don't work so well in the crosses, but Euro Kiwi is obviously quite well traded, and they do work. So, you know, and these levels, if you mark your chart with them, they are really important. So like here's the swing low here, this was the high, and then again 2 months running these highs here. So these levels are really important. That's what I was going to say. So
great. Somebody's asking for DXY, obviously from you, but Nick has already gone through the DXY.
Sorry, we did it. Yeah.
No, that's no problem, Nick, because they can just visit our YouTube channel within a few hours after its webinar is over. We post it there, so you can easily revisit the recording there and see what this is. Bottom line, Nick, if I'm right, you're seeing an AB.
Bottom line is that the DXY is a really important fib level that if we break, will confirm that we have reversed the long-term trend in the dollar index. But the first time we touch it, I think there's a good chance we bounce off it. If that makes sense.
Yes, perfect. Anybody else want Nick to run it? He did, my friend. You can see it on the. She did, my friend. You can see it on the recording.
Aussie.
No, we didn't talk. We didn't talk about gold.
Did you cover Aussie?
Yeah, Nick, you want to go over gold and Aussie?
Yeah. So Aussie. Okay, so I put a.
By the way, guys, gold got smacked about 2 minutes ago, like $5 or $6.
Yeah, the dollar's firming.
Okay, so Aussie, you know, is making lots of ABCs everywhere. So this was a big ABC down. That was the bottom. Then this rally, although it was messy, you know, if you picked your right highs and lows, this was an ABC rally, equal measured move. This decline was again an equal measured move lower. And what we've seen here, I believe, is another one. So sorry, from this low to here to this low to high. So this is an ABC measured move as well, and it's also a 50% retracement of this swing lower. So I'm bearish the Aussie dollar here for that reason. How far it goes, you know, because which is, you know, when markets are in correction or going sideways, I think it's going to depend on the broader dollar index. But that's why I've sold the Aussie. I think that we'll at least retrace 50% of this move, which is why I've marked it on here. So if this was just a big, so if this ABCD move here was just the first swing and a bigger one higher, then we would probably stall around the 50 or the 61.8. I'm going to put the 61.8 in as well. So that means downside, you know, we should be looking for it to stop around, you know, 74.50 or maybe 74.20. So, but that would be the first target for the Aussie. And when you mark on, I also mark on when I'm looking at it. So that's the 23.6 Fibonacci retracement level. I'm just going to make it really bright so you can see it. That's the key. So if we bounce from here, which is also these previous highs, and make a new high, then this ABC is wrong. So that's my confirmation. Once, and for me, when I'm trading it, once this breaks, this is when I move my stop to break even, and I can tighten up everything because I know I've got a proper reversal and I'm on side. And that's what I'm waiting for and watching for when I trade it. So that's the Aussie.
Amazon
gold?
Yeah. Oh yeah, and then Nick, before you go, Amazon's about $40 away from your target. That's still on track.
Amazon, cool. Okay. Yeah, Amazon's going to keep going. So it's over that big 2,000 level then, or 1,000 level, right?
Yeah.
Cool.
I think it got to 10, 11 or something like that.
I'm trying to find it. Brilliant. No, that's really good news. It's not there. Excellent. So actually I was working on Tesla. You know, everyone loves to short Tesla, but I think Tesla's got a lot more upside to come. That's not something I'd be shorting. So if there's nothing else, I shall hand over to the fabulous Steve.
Gold, Nick, they also asked for gold.
Gold, yeah. Course,
which as Dale said, got smacked. Silver as well.
I don't know if I'm allowed to talk about gold because, you know, really, like, I'm quite bearish. I'm trying not to be, but I am quite bearish. Okay, I'm good, and I'll explain why. Okay, so I'm gonna go to my.
You're more often right than wrong, so.
Well, I'm not. I'm not
what
actually, but okay, so for me, in gold, I've always seen this as like a declining wedge, and that we're going to keep going. You know, we've bounced off the 50% retracement, but I've always thought that we'll make another leg lower to the 61.8 at 890. Now we might not. Now quite often, you know, this is the 50%, by the way, of the all-time highs to lows in gold. So this is the monthly.
That was also
big
the high in 1980.
Chart. Yeah,
1980
exactly.
was the high.
Yeah.
When Russia invaded Afghanistan.
Right. Oh yeah, that's right. Yeah, I haven't got it on here, but yeah. Anyway, so this is what I was looking at, but I've always thought that this might be a declining wedge and we're going to have another leg lower. Now, the alternate, and if I'm wrong, what actually you're going to see is, because what you'll see is this is just the first leg higher of correction, and then we'll see a second leg higher of correction. Now, if that's the case, so we'll measure this first leg here, ABC. What happened is the 61.8 of this, so the first target, which would be the 61.8 of this leg, takes us all the way up to 1320, 1330. And if we make a full ABCD, we're going to 1450. So there's a bearish count. Like if you're bullish and it reverses, you know, then we're going to go all the way to the 127, because I always thought, you know, these this is quite a good level to always come back and retest. But so that's what I was looking at. You know, yeah, I'm bearish because I think that we'll stay within this wedge and continue lower, but I'm okay to be wrong. So there you go. And this rally, if I go to a more shorter term on the daily here, on this rally from the December 2016 low, if this was A, then the second leg was 61.8. So we did A, B, C here. So, oops, I'll move it down. So you can see that this was, if this is A, then we made 61.8. And in fact, if we make this an ABC, you know, the reason I think it might go higher is because a full ABC rally from this low would also take us to around 1330. So that would be the 61.8. You know, there's a lot of confluence actually at 1330. So that would be the 61.8 of this swing from the November 2015 lows. And it would also be an ABC rally from this December 2016 low. So yeah, potentially this is why that's why I've got this pink box marked up here, because that's what that confluence is. And if we do break out, so what we're seeing now is we're seeing a pullback to retest the trend line. And if it holds and we continue to rally, then 1330, 1320, 1330 is where we've got a lot of confluence, and that's where I'd be looking for first. And I'll just.
I think Komi can make a retest rebound scenario within a single night.
Now, yeah, so
likely.
So to be honest,
I'm just saying, not likely.
Yeah, no, I know. So to be honest, you know, this swing lower, I thought that we'd retrace and then carry on lower, and because we'd done that 61 and that was at the trend line, that's kind of what I was looking at. And we're sort of, you know, messing around. I do pay attention, particularly in gold and commodities, to the 200-day moving average, and we're sort of oscillating around it. You know, it held as resistance in February and in April, then we got above it and then we dropped back below it. So, you know, you quite often see that. So we might see range trade for a bit and then a big breakout, you know, especially in the summer. And the market makers in gold are pretty mean characters too. So we'll see. Everybody now is going to be, everybody who bought this breakout is going to be offside, annoyed, and everyone's going to start talking about double tops soon. So they're going to chuck away their longs that they bought on the breakout, and then it'll probably find support and rally. That's how it goes.
S&P's rolling over.
Not that I'm cynical or anything.
Nasdaq as well.
The host is bearish indices today. Nick,
Yeah.
you've seen some of my interviews with Norm Linsky, right?
Yes.
Okay, he had a big day today. Do you see anything astronomically happening today? I think some type of retrograde, but he pointed 3 weeks ago. Steve says he picked the day because, you know, you could say it's a turning point day because Call Me and the ECB, but he had this date.
And the UK election, yeah.
Yeah. So anyone could have said, hey, the 8th is there's going to be some turns.
Well,
But he had
funny,
something.
you know, it's quite funny because if you use Fibonacci timing tools, you know, which I look at and then take off because there's quite a lot of my charts already, a lot of them, I had a lot of turn days on the 8th as well. Okay. Even like Bitcoin was a turn day, so.
Okay. Anyway, I know that you don't laugh at that stuff. So
no, not at all. Pay attention.
Yeah.
Yeah, and I tell you, you know, yeah, the moon cycles as well. I don't know, you know, this is the E-mini. It kind of looks a bit bull flaggy to me, and I've still got an upside target, so we'll see. But
yeah, what do you got, 55 or something on that?
I've got resistance at, very important resistance at 41, 40, and 24, 41, 24, 42, but 24, 52, 55 is, yeah. Big butterfly pattern. And, you know, markets long bull runs tend to end on them. So
Yeah.
we'll see.
Okay. Got great coverage today, Nick.
Well, very welcome. Is there anything else anybody would like to? Not that my view matters that much. Sounds a bit vain. I better go now. Okay, you have control.
Okay.
Thank you very much, Nick.
No worries.
Always great insight.
Go ahead,
Thanks,
Steve.
Nick.
You like to have control. Go ahead, buddy.
Let's see. Okay, a couple of things I wanted to show. By the way, since you're talking about indices, Dale, I also like the FTSE 100.
Yeah.
We had a wedge, we broke below it. We are retesting the extension of the support.
Yeah.
We got an initial rejection of it, and now we are retesting this high and this closing lows.
Yeah.
So the FTSE currently at very important levels. A break below here is very likely to take us back to 7.1K. I'm just saying, since we're talking about indices.
Yeah.
And since we have the UK election, so it's, you know, it's more relevant. Having to do with gold, there is not much I have to add. This is what I had drawn yesterday, that a retest of this is very likely of this zone. But, you know, that's the main scenario. Alternatively, as Nick said, somebody can start claiming that this is a false breakout, this is a double top. Also, if you have a look at the weekly, if we close like that on the weekly, what do we see here? A double top on the weekly, of course, as well, because if you have it on the daily, you'll have it on the weekly, and a huge rejection, which is a shooting star out of it. And that's going to be a key reversal as well. So, you know, somebody can currently very easily make claims for both sides, for liking it short and liking it long. But in the short term, and as long as the breakout point lasts, and I will add this roughly the 1,260 zone, there is you know, there is no valid reason to be outright bearish. I agree totally with Nick on the Aussie USD. I see an ABC. If you remember, we were on that day here that we had the second continuous strong day of recovery, that I said that I don't expect the 75-10 zone to hold again, because we seem to be rebounding strongly, so that at least we should see an ABC. It's what in harmonics Nick calls AB equals CD. So that's what we got. So I like it, but I have to say that I like even more, and I'm actually short now, this one, which is the Kiwi.
We talked about it getting up there the other day.
Yes. Yes.
I think I had to draw that line.
Yes, to this confluence. And actually, we even made a pattern in play in the system. If we zoom in, let me actually do that. Let's bring here a 4-hour chart of Kiwi, and let's have a look at it.
You know, I just wanted to bring up one point. You know, when Steve, I don't know if you've experienced this or not, maybe people in the community have, but I've noticed over the years that when there's a real popular number, a real popular target, that it either doesn't achieve it, or if it does, it becomes meaningless and melts right through.
You're absolutely right.
Okay, so, you know, so a lot of people are banding about this 2450 in the S&Ps, and I think there's a chance that maybe, you know, it may not achieve it, at least not this cycle, or if it achieves it, it won't be significant, because that's where everyone's waiting to sell it.
You're absolutely right, but let's first see a real reversal. By the way, I drew this trend line as well here on the 4-hour chart, because I didn't have it on the 4-hour chart, because I focus more on the shorter scale. So let's see what we have here and why I liked to be short. The reasons are multiple. Reason one, we're banging on over, I'm going to state them with, you know, opposite to their significance. So the least of the reasons is the fact that we've been banging our heads on oversold territory on RSI, And obviously this move that started from a false breakdown on the 4-hour chart, if you examine it, even on the daily now it's overbought, has already run like 400 pips without taking any real breather. The second reason is that I can clearly count a 5-wave up, and actually we have an ending diagonal here. The third reason, and most important for me, is the fact that we have this wedge coinciding, so we have a triple confluence. It's an ascending wedge. It's this zone that was already drawn there. It's a zone that has produced previous tops and lows, etc., 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 and the confluence with the descending trend line as well. So we currently have a triple confluence, and if we want to take it to the 4-hour chart, look at the 4-hour candle that we have.
Not only that, Steve, you know, the community is about supporting each other. So everyone in face, don't buy any milk until Steve covers a short.
Yes, please stop buying any milk.
Right, no milk, and that goes for your kids and Stells and legs too. All right.
Yes, starve them if you need to. It's extremely important.
Yeah, drink soy milk or something in the meantime.
Yes. So you know something. As I've always said, does this mean that this is going to work because we're looking for a reversal? No, it doesn't. Would I take it anytime I saw this, you know, set up with confluence, etc.? Yes, I would, because from experience I know that, you know, this kind of multiple confluences is going to work at least 50% of the times, at least, usually more than that. And if your reward to risk ratio is proper, so for example, if you sorted here at 72.20, which was the beginning of the zone, and you put a stop loss above the 78.6, you would be risking 50 pips. And in my opinion, the first target here is this one. This one I'm showing you here. Let me actually draw it. It's this little zone that provided the short-term high and the short-term low, which is at 71.10, let's call it roughly. So 5 waves up, obviously that's short-term bullish because it can be an A, B, and then a 3-wave C, but I would at least expect something like this. So the risk reward is here for my taste, and that's why I took this one.
What was the instrument we were talking about yesterday, Steve, that showed a classic 3 drive and it looked vulnerable? I'm
Yes.
wondering what happened.
Let me show it to you.
What was that, the EuroCAD?
EuroCAD, yes, correct. Let me show you.
Wondering how that evolved.
Let's go check it again. There we go.
Okay, so it still didn't make a new high yet, and held under yesterday's low. Under yesterday's low, it's over.
Yes.
Okay.
Yes. It's very likely that the formation has already been completed. I mean,
Right.
the high of the formation is already in place.
Yeah, no follow through off that reversal yesterday.
Yes, correct. This was a very bullish candle yesterday, and this candle pointed that yes, we might have a retest of this high, or even possibly, you know, a new high, which I would love to see, because let me be honest, I usually like those formations when they break down. But if I saw one more high, I would be really likely to short the first bearish candle I would see of that high.
I see.
So now I'm monitoring this trend line. You know, you can draw it a little bit more like this. If you can hear my son, it's...
Yeah, and well, he knows you're not going to buy milk. And also Visha is going to help you out because his wife is breastfeeding his kids.
Yeah.
So you got a good shot. You got a lot of support in the community for your short kiwi here, buddy.
Yeah, same here. Actually, my wife is breastfeeding a little one as well. So, you know, I've told her that she has to keep on until at least we cover kiwi. Okay, yes, so EuroCAD is still in play. We already visited both through harmonics and through basic technical analysis the Euro Kiwi, so we've already seen that. We can have another look if you want at Euro Aussie as well, which we talked about it again. And the picture remains this. I'm still short from here, as we said, from the close of this day. I still like it very much. We're currently, yesterday we held this was the confluence of the 23.6 and the high that we had here. But I'm pretty optimistic that we're going to get below there as well, and then I'm going to be looking for this zone, the 46.10. So I think this is underway as well.
That's great.
I think Dale, that when you're a little bit patient, you end up seeing nice setups. You know what I mean? It's not something special that I did. You know, I was just monitoring some things, and you know, when everything came together, you know, it was the time to, you know, to pull the trigger. That was simply it. This is DXY, by the way, to have my view as well. Listen, I see three reasons here why the dollar might rebound. Reason number one, we broke below this, which could have easily been a bear flag, but we're not seeing any follow through yet. Reason number two, we have an RSI divergence. Reason number three, we have the DSI showing us that market participants are still extremely bearish the dollar. So I have to be honest here. I do not like being short the dollar, but I don't like being long the dollar yet as well. Of course, depends on the pair. For example, I just told you that I took a short in Kiwi USD. But in general, if you ask me about the dollar in general, I don't have a strong bias yet. I was bearish on the break here. I was bearish on the flag here. But I don't like this choppy price action. If we don't see soon the resumption of the move lower, which will reinstate.
It looks incomplete to me. We've had two drives. I think there could be one more.
Yes, I agree with you, but it looks like, you know, the easy part of the move for the time being, at least in the short term, might be a little bit done. And I don't like, you know, the amount of people that have turned bearish. So I have more of a neutral stance for now.
No, I wouldn't short it, but I'd wait to buy it for a third drive.
I agree with you. On
the first divergence, Steve, what I teach is that's the time to get out of your positions when the market's not confirming it. If you were short, so on this last low in the Dixie, it was a reason to cover, not reverse, unless, you know, you're a real aggressive guy. But I like to see at least two divergences and readings above 30 for turns to the upside, and under 70 for turns to the downside.
You're absolutely right. The more you wait for confirmation, the more you lose from potential profits, but you increase your chances of being on the right side of the market. So as almost everything in life, it's a trade-off. It's simply a trade-off. So it depends on what kind of a trader you are. Are you more prone to like extreme reward to risk ratios, sacrificing the percentage of winning trades? That's a valid tactic if you know what you're doing.
Yeah.
Are you more familiar, and do you feel more confident and better off sacrificing some of the reward to risk to have a better percentage of winning trades? That's also a valid tactic. You know, and then anything in between is also valid, as long as this is the kind of trade you familiarize yourself with and you know how to treat it.
Jess, no interview today. We'll have Peter Bookvar tomorrow, CNBC contributor. Peter Bookvar, very intelligent market watcher, trader, manager, blogger. So no interview today, so I don't know what you think, Steve. Perhaps we can wrap it up or continue to take questions from the community. Your call.
I'm absolutely fine with anything, Dale. If people have something they want me to show, I will be more than happy staying longer and showing a couple of more things. So it's up to them.
Any questions for Steve from the community? Aussie Kiwi. Looks like an Aussie Kiwi wants to take out that major trend line to me.
Okay, let's wrap it up. No, I'm kidding. I'm kidding. I just said that.
Now you're getting the Euro, Yen, USD, ZAR. Okay.
Listen, this was a strong rebound from this confluence of supports. Nick had pinpointed those as well. The fact remains that after this strong rebound, we have just seen some chop.
Yeah.
And the more this goes on without seeing a bigger rebound, the more bearish the interpretation. So yes, I find it quite likely that we're going to have a leg higher to perhaps at least test this 1055 zone, but the price action at the moment is not convincing of strength. So yes, you shouldn't be short here given the rebound from that we saw from 104, and unless you are short from 104, you shouldn't be long either. That's my position.
Well, if you got long at 104,
I would be holding, definitely. If I got long at 104, you know, I would be thinking to myself, because I've taken plenty of trades like this, I would be thinking to myself, listen, this is a 20-25% probability trade, but that gives me, let's say, 1 out of 4 chances that I'm going to make good money. So I'd rather lose this small profit and leave with a break-even or a minor insignificant loss and get my chances for a bigger rebound than you know, just book some like minor profits and then perhaps seeing it propel higher to at least retest, because the next level of resistance I have after the 1055 is this one. You see it has produced plenty of lows and highs in the past, which is 1063. So then you're looking for 230 pips from your entry, which isn't bad at all, especially for a pair that usually, not lately, but usually is not in a rush to move, you know, much, because it's two crosses. It's a cross of two currencies that most of the time are, you know, quite tightly correlated with each other.
Yes. Okay, buddy. Let's see, USD ZAR.
Can I ask a question about Forex Analytics? Yes, Martin, you can go ahead. What's your question about Forex Analytics? And as he's writing the question, let's say first of all that Euro USD, we didn't have a look at it, you know, from my chart today. I've had this ascending channel for a long time, but I'm also monitoring in a shorter term base this ascending wedge. So, you know, I'm not bearish, but on the other hand, I'm not bullish anymore. We're seeing this this little formation breaking down here. If we test this zone, I'm going to be very interested to see what happens, and especially then if we break below this zone and the ascending channel, I will be looking for a deeper correction. But for the time being, you know, I'm more or less neutral. If you shorted up here, because we had, you know, the market gave you 2-3 opportunities. If you're a short-term trader, this is not my kind of trading. The market gave you 2-3 opportunities on the daily that it was obvious that it showed some inability to go through it, and you're already short. That's very good for you. You know, you can trail your stop loss at break even and just enjoy the ride, whatever the ride brings us. We also had this RSI divergence that I had marked here. So signals that we would be seeing a correction in Euro USD were there. Now, how deep that correction is going to be, I'm a little bit skeptical. I'm bullish the Euro crosses since quite a long time ago, and to the medium term, I remain bullish. But on the short term, I'm not bullish Euro USD anymore. I mentioned I'm short Euro Aussie. Correct. I'm short Euro Aussie from 2 days ago. Yes. I talked about it yesterday as well. I'm short Euro Aussie from the day before yesterday night, actually, after the webinar, quite a few hours after the webinar. A friend is asking. Question, coaches, what is more advantageous, trading a few pairs and being ultra familiar with them, like Euro, Pound, Euro, USD, or cable, or trading using your type of technical analysis on more than 8 to 9 pairs? Yes. Okay. Having to do with that, I've said before that there are two types of traders having to do with that. I'm of the type of traders that monitors 45 markets because I don't like to take many trades. So for me, it's important to monitor a lot of markets so I get to trade, you know, to have some trades on almost constantly, because with my type of trading, if I was only monitoring 3 or 4 markets, I would be trading, you know, very little. But there are other types of traders that monitor. I even know traders that trade a single market, and they do very well. So unfortunately, I cannot help you with that. You need to find your own trading style on that. But I will tell you one thing: how many tickers you monitor is and should be correlated a lot with how often you want to trade, as indirectly I said. Martin, I think I understand your question that you don't see Nick's pattern in play.
You're Euro Aussie. He doesn't see. You mentioned you are short, but it's not showing up as a...
We don't cover Euros in ForexAnalytix, that's why. It's as simple as that. I shared that with the webinar, but we don't cover Euros in ForexAnalytix, because if we covered all the pairs, that would be like 45 tickers. And to cover 45 tickers, we would have 2 options. Option 1, to not do a good job. Option 2, to have, like, you know, 10 plus people working on analysis on the site, and that would create issues.
Bottom line is you covered it here.
Yeah, I covered it here. If I reckon that the Kiwi has broken the wedge on the short term, it's trying to break it at the moment in a 4-hour chart, in an hourly and a 4-hour chart. It's, you know, it's looking to break it at the moment. But I'm a person that gives more base to daily charts. So if you're asking me if it has broken it, I will tell you that the most important element for me is to see a daily reversal. I'm already short because of the 4-hour chart and the confluences, but I would love it if today closed like a shooting star, for example, in the daily chart that you see here. I would love it. I mean, that for me would be, you know, the best verification that, you know, I took the right trade. No problem. Thank you, Jack. If the Fed raises next week, would the USD move higher against the JPY, given the general condition of the potential mess in the US? Listen, Gino, I have no idea, and I'll explain why I have no idea. The market is already pricing in that the Fed is going to hike. So what will play an important role in the US dollar reaction that we're going to get when we see the Fed hiking, which we're going to see the Fed hiking, is going to be the language and the statement and question answering that will accompany the Fed hike. So if we get a dovish hike, you can very easily see the dollar weaken, very easily. You know, regardless of the fact that they will have just hiked. So pay attention to the language. That's the only thing I have to say about the June meeting of the Fed and the possible hike. Okay, I think that's it more or less. Dale, I don't know if you want to go through anything else, or we call it a day.
Yeah, I think we could just wrap it up and thank everyone for their great questions, and Blake for coming by, and what a great treat having Nick here and even doing analysis on Euro Kiwi on the fly. So we'll wrap up the week. Tread lightly today, guys. Lots of stuff going on.
Extremely careful today. You can see violent moves, you know, opposing one another, fades and everything else. I mean, I cannot stress enough what Dale just said, which is the wisest word he could let you with. I mean, if you already have positions, just, you know, take care of your positions the proper way. Otherwise, be very careful. Be very careful. We can see stupid volatility today with all the events.
Right. It's Comey through testifying, and then he goes in privately, I believe. So
I think you're right, yes.
all I could say is this. Use less leverage when you're trading Comey. Don't be a chump and have your account get blown away. If you don't use less leverage when Comey's open his mouth, it could be a bad outcome. Use less leverage. And it didn't rhyme. So anyway, be careful if you're trading, reduce leverage. We'll wrap up another good week. Hope everyone's having a great week and that we're adding value to what you're trying to accomplish. That's our mission every day. Okay, I will, Ben. I'll stick to trading. And remember that our mission is to build up identified traders every day. So hope that we're accomplishing that. Cheers, George. See everyone tomorrow. Good hunting the rest of the day. And don't just count your pips, count your blessings. You're welcome, Hardianto. Good luck on your guppy short. See everyone tomorrow. Adios, Dale. Thank you, Steve, for your complete rundown today. It's great to have you backing me up every day. I appreciate it. Thanks for making my job easier. See you later, everybody. Adios. See you, Gino. B.